Hi there, welcome to SUI Wyckoff Technical Analysis session. So in previous sessions we talked about dual breakout points or like timing, and it actually happened, and more than that, it happened in a way that tells us we should not blindly follow what textbook theories defines. So let's quickly dive in and see what actually happened and why I'm saying this. So this is the weekly chart, and SUI basically just broke outside of this downward trend line. So in previous sessions I mentioned two key timing, right? So these two time points over here. One is the white dashed line crossing the light blue key level, and the second point is where it crosses the yellow dashed support basically. So these 2 points, what's the significance? One, here, where the white line crosses the light blue key level of 3.27, I mentioned that the crossing point is somewhere around the week of September 15th, meaning tomorrow, or like if you're in an earlier time zone, you're already in it. And I mentioned a lot of times, the breakout won't wait until that point, and indeed it happened just this week. The breakout happened, and it challenged the blue key level of 3.90, and we see this wick touching that area, and then immediately got some selling action triggered. So that's the big picture on what has happened. While this is still under development, this I'll remain this tag over here. Actually, this is more than upwards of the distribution. This is more like a UTAD2 if it really happens, because we've got a UTAD right over there. So having said that, what's important is this may end up being an LPSY only. So rather than putting this sign of weakness over there, it may happen later in time. So this, I'll put the percentage right there, because the sign of weakness will just be something following the LPSY. It will eventually come down to that level. So I'll put this so it would be easier. And the challenge over here is, now that it has broken outside of this downward trend line, this resistance line, but then it's got suppressed by this blue key level of $3.90. The volume itself kind of look like it's declining. There's only about 7 hours left for this week's candle, unless somebody like a whale or I don't know, the market compositor sold some good news out, or flushed some good news out to boost SUI price. Otherwise, this week's candle looks like it's going to finish somewhere around this level. That's actually below the buying climax back in November 2024. Okay, remember this. The buying climax we had near the end of last year was right below this same blue key level. And in terms of Bollinger Band Keltner squeeze, currently we have entered a squeeze. So you see this vertical shade at the back. For me, I would consider the squeeze happened already since late July or end of July, early August, but no problem. For a technical definition, the traditional one would be for the purple lines getting into the orange. So when a squeeze happens in the daily chart, the swing that we would see may not be as crazy as what we see now in the weekly, because the daily basically can only swing within where the weekly allows it to. Now, an example here is August 2024. When the squeeze happened, it lasted only for about 4 to 5 weeks. So according to my definition, it happened somewhere here, but the real actual technical definition, especially calculated by the computer, it happened 1 week later, but that's not the key point. The key point is the subsequent action, the swing. Initially went up and then quickly swing back down to the level we're seeing, to the other side of the channel, basically, to the bottom edge of the Bollinger Band. And then now we've got these swings getting smaller and smaller, and we enter another squeeze. So is it going to swing to the downside this time, or is it going up instead? A lot of times when the squeeze happened and the price was below the center line, it swings towards the upside, much like this one. It started somewhere below the center line, and then it swings to the upside. Well, even though that may not be 100% of times the case, still it can provide a little bit of indication. If it's on the upper side of the channel, it may be having a higher chance to head to the swing to the downside. But hey, don't forget, a swing is a swing. It can be just a V shape. It happens one way, quickly it turns the other. So it's not the end of the world if you have a stop loss and you guess the wrong side, right? So back to the picture here. The other thing I want to show you is exactly what I said in the title. You see I have something up there. Both the weekly chart and the daily chart, we will see this happening. So what I'm trying to show is we see a descending triangle, right over there. This line and this light blue key level. That's what the traditional textbook theory says about candlestick patterns, or just this triangle, descending triangle. It enters, and then it bounces with lower highs, and then eventually it should go to the downside. But then this did not happen the same way. So if I switch to the daily chart, it will be even clearer. Let's move it to the daily. So enlarge it so you can see clearly even on a mobile phone. It enters down and then up with lower highs, similar lows, similar lows, similar lows. And eventually, has it broken to the downside? No, it broke to the upside. So be mindful when you find these kind of sources online and telling you that's how it's supposed to happen, because it's not always the case. This is a very good example that it has not followed the textbook definition. So let's string this. And now, given it has broken outside of this, and the retracement has already started, so that may be just an LPSY. So previously it was at that crossing point, but now it has climbed, but that doesn't mean it can't be an LPSY at a similar level, similar to what happened in August 23rd, 24th. We were at a similar level. So now a lot of selling has been happening today, and like after the rejection by this light blue, not light blue, the blue key level, it's heading back towards the light blue 3.27. And one thing here, the previous resistance line, this white dashed line, is now a support line, but it's not going to support much compared to the light blue key level over here, because along with time the price will eventually come to the light blue key level to find support instead of this white dashed line. So I wouldn't be bothered by this white line much, since we have already passed that. More important, I would say, is this yellow line over here, because this has been a longer term upward trend support line that started way back since the spring. I mean, not the Four Seasons spring, is the spring of the Wyckoff stages. That's gone all the way back to April. So beginning of April we had a spring during the accumulation cycle, and that's what brought us to the buying climax and upthrust during late April and mid-May. And then the second reference point was the selling climax back in June 22nd. So this forms a support line for the current price action. If the price further retreats, passes through the light blue key level of 3.27 and challenge this yellow upward trend support. If it breaks through and go challenge the green key level of 2.9, that's a big indication that a trend has changed basically. So it may well be like entering a new accumulation cycle. Remember what happened here back in mid-June till early July. That was a quick 3 weeks accumulation. So when the price really comes back to somewhere near the green key price level, SUI may well has entered that accumulation zone again, provided in the weekly it hasn't finished yet. So assuming it's still continuing about that action, otherwise if it breaks the green and doesn't reclimb to this yellow support line, then even the weekly, the big picture, may be entering or trying to enter a new accumulation. So that's the significance of this if it really happens in a way that go below the green key level. So that's all for SUI. Thanks for joining me. Remember, don't forget your stop loss. That's our best friend.